Good morning, traders. My name is Christopher Vecchio, currency analyst with Daily FX. Today is Monday, January 27th, 2014. These are FX headlines as we turn the page to Europe, and it looks like the U.S. dollar is starting to come off a little bit. One of our previously loved levels, 10,016.50 in the broader U.S. dollar index, might be coming under pressure in the next few days as several key trend lines have started to break in this index. We see going back to the October low bounce, the early January pivot now is under pressure. So 1650 is important to us because that was really on a closing basis, the high that governed price in late November. And once we got above there in mid to late December, finally that dollar-yen rally really accelerated to the upside. So we're watching this today, particularly with respect to the dollar-yen and the Aussie dollar, as those commodity currencies, and really the Asian currencies, have been under a little bit more pressure than, say, the euro or the pound recently. But speaking of the euro, we're seeing the euro here now. It's important for the euro to stay above this 136.50 level today, right? It's not only the prior swing high in this potential reversal, it's also the support line from the July-November 2013 lows. And so this week, that 136.50 figure, particularly in the lead up to the Fed, is going to be very important. If we look over at dollar-yen staging a bit of a comeback today as this emerging market pressure has come off. We see that there are some central banks in the EM space getting ready to operate, and indeed if they're starting to move away from this crisis period where there's actually some efforts being made to address what's going on, then maybe we see a brief relief right now in the yen. Either way, I'm looking at 102.85, 102.90 right now in dollar-yen. We see that that's the swing low from January, as well as the uptrend from October and January lows. And so, if we get back above there, then maybe we're talking about a more concerted rebound. For now, I'd be wary right there. Otherwise, we're under pressure from the November 2012 and October 2013 lows. That's right near 101.50 this week. It's also July's swing high, so I'd be watching that. Finally, I talked about Aussie dollar at the beginning of the program here. Aussie dollar staging a bit of a rebound as well after setting a new low. Yesterday we had an attempt at the lows overnight, didn't get to them. Now we're seeing that we have a potential bullish falling wedge forming, and this would really stunt those plans again for the Aussie sell-off continuing. So we're going to watch this. If we get above 88.10 today, I think that would really give an indication that maybe we should cool it on the bearish bias and see really where FOMC settles before we continue any further. When we're talking about what's going on today, we have U.S. new home sales coming out. It should be noted that the data that's been coming out for U.S. new home sales, it's really, or just housing data in general, it hasn't been that great, particularly because U.S. interest rates rose in November and December. So seeing a bit of a disappointment there might not be surprising. Resiliency, on the other hand, would help the U.S. dollar get some luster back ahead of this Fed meeting. And that's really it for today. There's also Fed Dallas manufacturing, but really that shouldn't drive the markets too much. Otherwise, keep focused on the calendar for the next few days. I'll be back tomorrow morning at 6 Eastern, 11 GMT in Daily FX Plus for my weekly trading Q&A. Hope to see you there.